Okay, so today is Monday, it's the 3rd of June, and going to take a look at oil and probably gold and silver. A couple of things on my mind, yeah, these two, and we'll see if I can pack in some of the currencies as well. Quick glance, Bitcoin is going up, so that's a good thing. Okay, so let's look at oil now. Originally, I had posted this on TradingView, West Texas. So its price action actually came down. It came down over to this level. Just annotate this one. So when it came over to this level, see that this actually broke, made a lower low. Then after it reversed sharp. Now when it reversed sharp this way, it broke this top. Either it was gonna go up or it was gonna stop hunt for them to bring back down. But at this point, it would be hard to tell whether or not it's going up or down. Okay, so the move that the easier move would have been this one, some kind of slow move up. Even if it breaks or so, you're looking for a move up. But that would be the easier move to see. Now this move down is tricky, very sharp, and ultimately this is what it was. All right, so this was like here some private structure, sharp correction, and one move down, and these are the trickier stuff. The trickier stuff. So essentially, right, when this price action actually made a move up here and took out this orders here. So those who were in the cells, break the low, they believe it's in selling. Well, if the trader is too aggressive here, then what will happen is the trader put a stops up here. If they're too tight, they'll be stopped up. So those who were in the sell ultimately had to buy back their positions, and then the smart money comes and sells. So they managed to get in at a good price by basically swapping orders. So if you were those people were forced to buy back their original sells, basically had to find someone to sell it to them. So smart money would sell it to them at the high, and then now they can cash out at the low. Okay, so being too aggressive is always tricky. So it's always a good idea if you're aggressive trader. Someone's getting in and out quickly is a good idea, depending on where price action is in the whole scheme of things, right? Now, if this one also, if this one had gone up here and this happened to be strength, right? Strength that actually pushed this up. Well, if this had proven that it's making some kind of all those swaps here, it means naturally you'll be interested in this move up, but it came too fast, and that's why having a focus on time action is a very important thing. It protects the account, so that people who are not so aggressive will tend to be more patient. This will benefit the account greatly, right? We can trade with less living on edge, so to speak, right? So what now, right? So since this came over here strong, few places are places where it could react there. It could also react somewhere here, right? And depending on how, even if this one was to shoot up straight, this can also have a small reaction. Even if it's shoot up straight, you can have a small reaction there. If let's say it just crawls up really, really slow, of course, then you're looking for the bigger move for a bigger move down. So it really depends on how this actually moves up. So is it go up this way or is it going up like this way up? So this one encourages the downside. This kind of strong move, even though it could shoot up straight and still fly down, but you don't want to take that chance because it's not safe to just let's say you go up to around this level here, then you're thinking, all right, it's so strong, you could always push up before it starts to drop. So, but before you actually push, this is just a reaction that you're looking for. Can this just go up and shoot down? Well, you see, it can. It shot up straight and came down straight. So it can do that. It can do that. But unfortunately, it's also 50-50, right? You can shoot up here. You can do this, continue to go. You can shoot up here. It comes down and it continues down. So when it's 50-50 that way, there's no point in, you might as well go to the casino, right? 50-50. No one made a lot of money just flipping coins, guessing heads or tails. No, 50-50 is not a good thing. So it's best just if it goes up here, depending on how it goes up, it's strong. Know where the risk is, and then trade accordingly. Right? Don't go for 1:1. 1:, like I don't know, 3 ratio when the price and time action does not justify it. Right? So just because this looks strong does not mean that this sharp up come here and then 1:3. 1:3. But there's no point in that, right? 1:3. You want to like say here, you want to risk this to make that. There's no point in that, right? Okay, so this actually the main idea is emphasize the importance of defense. And then now that it has become clear, now you know these are all good places. All these are good places to actually look for reactions or the bigger move down. And if this one starts to crawl and then start to show some strength, we know where to aim for targets. So that's the beauty of having patience and waiting to see how what actually plays out, right? Okay, so Brent crude, they basically both move for most of them, move pretty similar, right? You put on daily, look, yeah, just pretty similar. This one dropped, this one also dropped. This one crawled up, this crawled up, down and down. So they're pretty similar in which they move in overall general direction. Oil. So oil right now, either you look for the sell, wait for it to crawl back up. So both of them are the same. Either you look for them to crawl back up before you look for the sell. But if trader is good enough, you can always try to look for a buy up to these levels, and you know where to take profit instead of buying here expecting to get to the top. You know, oh, these are all dangerous areas. If I buy it, I need to know where to get out, basically, right? Now let's look at so let's also go look at my pound yen. Pound yen is still going good so far. Just get in and just wait to be stopped out, basically. So the way to trade pound yen right now is just not to do anything. As you can see, looking for trade, so it's still down. It's nothing to do. If you want to stop me out, it will stop me out eventually. But right now, it's going according to plan, right? We're playing for this A, B, C, looking for this third wave down. If I'm lucky, maybe I can, it'd be amazing if we actually can get there, right? So let's see if it gets there. Okay, let's go look at some requests on gold. Let's go look at gold. Look at gold, or should we look at pound? I want to speak about pound. Okay, never mind. Let's go look at gold first. One second. Let's go look at gold and silver. So this is let's look at the daily chart for gold. So I'm going to reset the chart. All right. So this is where we are now. So gold actually made a push up to this level, around 1312. Let's look at silver. Silver always looks good for the upside. Even if you're looking for this move, even if we don't get the move, there's going to be some kind of move that's going to come and take out all these. Now, could this come up there and then drop back down? That's possible too, unfortunately. It's very nasty, but that's how others are swapped out, right? Because if you're looking for this move up, so let's say people who are in the early buys and they put a stop here, well, you come here and then they're forced to sell. Someone will take the buy, and then this is where it actually starts to go. So that kind of move always exists. Remember, someone needs to get screwed in the market in order for someone else to make money. Right? So that move must always happen. That move can always happen. Now, if I cross-reference silver to gold, to be honest, I actually find the buy very interesting. But what you have to be careful is this is a potentially first move, this is potentially second, this is potential third one that will come and break this low. And then if it does something nasty, remember the nastier the move, the better, because it means that enough people have been screwed, right? Because If it does that, people are looking for that and for that. But if that don't happen, that means, and it comes and breaks, it means that people are getting screwed. And if we get screwed, it means we can make money. Right? It means we can make money. Therefore, you must be very aware. We must be aware that this move can potentially happen. Like it's a lot like chess. The more possible movements, or attacking defense movements we can see in our mind, the better chance we can win at the game of chess, right? So if we can see more movements that the charts could possibly make, then we will be more conservative and more patient on entries. Okay. So now, can this actually do this? Of course, it can do it. That's one thing, but it can also do this. You see, it can also very slow. That's why one important thing for trading that I've mentioned before is to termite your way up. That means like a big tree. This is a big tree. So let's say you and I are termites. We're just little termites here, right? You and I are little termites. This is the feet, right? So we'll just eat a little bit of the tree at a time. Just eat our way up. So as price action is going to the upside, you just try to eat a little bit, or just try to eat your way up. Just try to eat your way up like this. You see, right? Let's say you got rid of the bottom here for whatever reason, you just want to keep it all the way up. Well, don't forget there's a big drawdown over here. So unless you're willing to give back so much money, termiting your way up is actually not. It's a good idea, I think. But so if let's say price action was to come over here, right? It starts to break up. This is actually a good buy. So if it comes here and breaks the low here, this is also a good buy. They're all very good buys, right? So anywhere between like $13 around this level here, these are all good places to buy. Now let's also look. Can this go even lower? Can this go even lower? Let's go look at the weekly. So I'm looking at it more from a pattern point of view. Let's look at it. Pattern point of view. 1, 2. Yeah, it can. Unfortunately, it can also be like this. No. Sorry about that. It can also do something like this. Bum, 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 bum. Break this low to around 12, and then it can also push up. All right. So anywhere here is fair game, right? So is there any? So since we have that in mind that it can always fall to at least around 11.5, $12. Can you imagine if at this price smart money were to buy? A lot of people would have been stopped out because they were in the early buys. They were stopped out. So when they're forced to liquidate their positions, somebody will be buying when everybody is forced to liquidate, and then they buy low and they will sell high. Same for Bitcoin, same for everything. Okay, so getting too early in the buys and just putting big lots here, and this going to fly and become a $500,000. Well, it's not so easy. There's a large time action. There's still there's a lot of possibilities still. All right. So if we plan to buy with very little confirmation, then the lot size has to be extremely small because you need to account for movements all the way down to $12. You see, right? There's no confirmation. There's no swing. There's just one up, one down. There's no confirmation of this going to the upside yet, because on this time frame there is no higher high. Right. So this is a weekly time frame. Right? Weekly time frame. So some if it's on a weekly, some ways the emphasize upside is if this was to break and then this starts to pull back very slowly, something like this. So around this region is where you'd be interested in the buy. In terms of outside, that will kind of confirm it, some kind of higher high, some kind of upside move, basically. Like, I guess this is also one to see here. Starts to pull back. Some funky correction. Ultimately it came down, but not after it did something difficult. But ultimately it still did a lower low. It did something funky before it dropped down. So that's the kind of idea that you're looking at. So if let's say this was to go up, some kind of funky idea, and then it starts to go like this. So on a weekly, you don't really have that yet. So saying that this is going to go up, it's an early hope. Right? What would actually emphasize the upside? If this one actually comes and breaks the low right now, breaks all this, then at least we have this kind of 1, 2, 3 kind of look, and this is also emphasis on the upside as well. Right. So I know people are already in the early buys. I think be very careful. Don't put down too. Be aware of how much we are risking. And if we're going to trade silver, we're going to put big lots, then of course we got to not trade the forex pairs as well, the oil, because we can eat up into the margin, right? And but you don't want, and the last thing we want is to be margin call only to see this one go up. So ultimately we are correct, but the count had gone bust before this move actually happened, right? So silver on the big picture is still kind of iffish. Now, if we're going to talk about day trading, all this is good. All this is good movement. If you see anything that you can buy, going up to here is actually a good buy to do. But again, this move up doesn't mean that as well. It just means that all this is fair game. Even after it reached there, it could always just drop again. Right? Remember oil? You saw oil. Oil actually did something like this. It broke this and then it broke down again. So you can always break up, break down. It doesn't really mean that it's going to go on forever. Right? So if you turn your way up slowly, basically, if you whatever you can get, you just get whatever you can get. If it's and then just trade it. If it goes higher, pulls back, move your stops. If it goes again. Basically, that's it. And the reason why you do that for silver is because another possible move, of course, is instead of this one dropping, you could always do a flat. But then this is also an upside. Whether it goes up so high or whether it goes up, it's still up. So you still need to buy, even though a possible downside is there, does not mean you don't take the buy, because there are just so many possibilities. So what we're trying to do is try to get in on an entry that gives us a less risk, because we can manage the entry, then we can allow price action to play out in a much safer way. So we can watch the fight between the bears and bulls from a safer distance. That's that, right? So still a good buy to take, right? Still a good buy to take if there's a chance in silver. Right. So what I'm giving is the big picture, the big picture of what it could actually do. Right. So so right now the buy still looks like a good idea, I would say. Yeah. So I can also see like these levels here. So all good levels to have. All good levels for at least some kind of move. But remember, a move here does not guarantee that. You need some kind of sideways. Or otherwise it goes up and then it trails back down again. And they're giving that on the bigger picture, there's a 3 drive, remember? 1, 2, and then 3. So let's say if I was to but this is just one of those possible moves, right? Hold on, not that. So here, and then so this move is possible. So this one could always just go up and then boom, down, right? To give you that look. Of course, this one you're looking for up, right? So, but before that happens, this move is still good to look for. Even though we see this, it doesn't mean you don't take that, because that could also become that and then that. So, see, both can still happen, right? So you just trade accordingly, right? Next one, we're gonna look at gold. Gold broke this top, so right now it's in a funky place. Now this is going to be important. This is a potential third wave. So what you want to know is this third wave going to continue, or is it going to always remember the oil look, it goes up, it plunges back down. And seeing all the possible moves in our mind is just you just need to emphasize that, like over here. Now we're on a daily chart. Just because it's sharp doesn't mean that. Just because it's sharp, right, doesn't mean that you're going to get that. In this case, it never happened, right? And instead of going this and then here and then up, well, this never happened. Instead, it plunged down. So it came down, it went up, it went down. Very sharp in every direction. So likewise, when you come back to here, just because it looks sharp, just because it looks like there's a 1, 2, 3, and there's uptrend is going to go up, but actually it could be that, and then it just drops. It could be that as well. It could be that as well. You see, there was no upside, right? That's why impulse correction, it's just a theory, but the application is more important, right? So what you need is a couple more swings, maybe something smaller to confirm the upside. Even if it comes down to this level and you see something small like this, these are all good buys, because at least you are risking something small. At least even the biggest stop. If this one comes up, biggest stop, it comes down, that's also possible, but at least you were able to lock in some money. So in day trading, I always try to have something to show for before risking the cash, right? But let's talk about this initial move that I drew here. For that, let's go to the 1 hour. Possibilities here would have been, this could have been all the correction. This could have come up here, right? This move here could have happened here as well. Because this kind of movement is what screws people. It's what screws the retail traders. And well, when we start losing money, somebody is always accumulating orders to a certain direction. This is kind of movement where market makers actually do that, basically, right? But so it's not happened yet. But if it wants to happen, if it starts to do this, and then down, so you might get something like that. You know, this kind of butterfly, we call it a pattern like this. Someone's getting screwed right there, I can tell you. So right now it's not happened yet. So we just have to see what it does. That means on right now when it's at this level, there's nothing much to do. Right? Let's say someone decided to here, then decide to buy up here. A little bit risky. I didn't take this go by because what I would have needed was for something like this. You see, there wasn't any sideways for me to take this trade actually. Like for example, like this one over here, if this had gone up, I would have taken it. This one here, like this one, I would have taken that. So you need something before you know, some kind of time action accumulation, right? Before we actually take the next move. So this one, some kind of accumulation, but your stop has to be here. Could this drop and take up this level? It can as well. The reason for that is because you don't actually have a nice sideways here to have more confirmation upside. Basically, the more orders being swapped out like this, right, the better it is to indicate movement in one direction. It's going to keep moving like this, you see. Right. Right now, this is too sharp. Not much you can do. Just have to wait for a bigger pullback to decide what to do next. Right. So when things are unclear, it's best not to do anything. What I think is the easier move for gold is I prefer not. I don't prefer this because this stuff requires big cycles, big corrective cycles, and you just have to in order for the trade to be safe, in order for the snake to be defined, you know, this is very poisonous movement. What we want to see is the easier one would be for this, just come back real slow like that. This will be the easy, that will make it easy buy. And even to break this top, that will be perfect because then you're going to have some kind of pattern like that. You see? I'm sure we all know what that is. See that? So this kind of pattern is something, an extra thought we can have in our minds on where price action could go. But you cannot, of course, you need some kind of little confirmation before you take the buy. There are many ways you could actually buy it up. Multiple entries, single entries. So that depends on the trader's tolerance, but that's come to trade management. So I'm just focused on the general analysis of how price action can go. Okay, so right now, hopefully the easy one would be that, and that's also in line with the silver movement, which even though it's possible it could. Let me just clear this. Okay, even though silver, not on the silver daily chart, even though silver could do that, but don't forget it can always make 3 drive. So 1, 2, and 3 is always possible. So basically, if you want this move, if you want this one to go up, you want this move, and silver you want that move. Well, then You don't want gold to come down. You don't want silver to come and break that. Basically, all right. The easier move I see is actually the buy. So if you want to skip the sell, it's okay to skip the sell if you want to skip the sell. But still, if you're able to sell from 14 to 12 to 13.5, it's still a substantial move. You see, it's still a substantial move. So sometimes even though we think that, oh, I want to take the buy, I want to make the buy, but ugly though, I mean, the way silver came out was really ugly, but still the price at the correct direction of price is down, even though it was ugly. Therefore, I would say good trader should not only look at the bigger direction, but sometimes you just got to take the bad as well as the good. It's not the most ideal wave down. I mean, this is what everybody wants, but sometimes even though this was not pretty, but the correct direction is still down. So a very good trader will still be able to sell this to the downside, regardless of whether it's up or down. Because this was to come down like this is still a hell of a lot of pips. And just saying that this is upside because of correction impulse, it's not good. It's not good because this correction happened to be really, really deep. So if you're really good at studying this kind of weird B waves, like this is A, this is B, this is C, and you can take this cell down, that's a lot of pips to be made now. Okay. So therefore, let's come back right now. What I hope for is this is the end. I hope that this goes up. All right. But again, you can do that. So wait for a little confirmation before you actually take the buy. So likewise, you want to see the buy. Some little confirmation here before you take the buy. Little confirmations would be like, any little consolidation, you can take that. Right. But you need this big structure, this big correction to support the smaller one over here. Okay. Let's go and silver. Okay, I'm going to stop right here. I'll be doing one FX sharing series on correlation, and that would be interesting. And I will stop here. Okay.